Okay, welcome everyone to the UK inflation rate live trading session. All right, now the aim of these sessions it's twofold. One, to sort of guide you into what's happening in the market, show you exactly where I think the best trading opportunities are, as well as an overall learning experience for you guys in regards to how someone with a lot of experience analyzes the market and then also identifies the opportunities. Now, I did this. Analysis about what have we got here 3 hours ago. The analysis won't change too much, right? But we do have a situation where everything is lighting up, and quite often amongst all the noise, and I'm talking about sort of the news and things that come out of like I was going to say Donald's mouth, but just in general, geopolitical events that are moving the markets around, then you can lose track of what is actually going on, right? And if I just have a look at the daily charts here, you can sort of see, you know what, it looks like the dollar's breaking down, but you know what, on the well, it's sort of like it's not like massively going up, but it's not going down. Okay, so this is where we can really focus on what's going on. Now, I'll use my LSG platform as the when we come back to the data. But first of all, it's just a matter of, what I would generally do is have a look across the market and see if anything specific is driving the markets, right? So usually North American equity markets are a bit of a key driver. If anything, they're up, but they're not up much, right? But what they have created is a bit of a risk on profile. Euro, Aussie, sterling up, and the dollar overall down. Okay, so that makes me feel a little bit comfortable. Looking at the US Treasuries, okay, they are, a little bit higher than yesterday, but they're tempered, right? The moves aren't sort of really going anywhere dramatic. And looking at the feed from the futures market to the currencies, you get a bit of an idea of what's going on. Okay, so I've got two different aspects here. One is follow the trail, where I've got the bonds higher, and so we can see very clearly, right? The North American equity futures up. Well, you could probably say this is slight. Like the long dated stuff is up. It's only like zero point 0.1 or zero point 0.2 up. If anything, sort of steady to up. But we do have the risk on profile that we're looking for. Now, that's sort of important because as we come in to looking at the markets, you want to know where's momentum just in the common market itself, right? Because once we start looking at the numbers here, and these are the two numbers, right, that we're really looking for. You get the retail price index, you get the core numbers. It's like there's a calamity of CPI numbers, but if you know which ones to look at, it makes it a bit easier to identify, where the opportunity is. Now, let's just get this squared away. Looking at, the year on year, the central banks, they don't micromanage the economies. Well, they do to a point, but their macro plan is what they're looking for as far as interest rates go. They're looking for a print of 2.8, right, for this CPI, 2.4 to 2.9, the range for the CPI. Now, to me, that's a pretty big range, right? And the same for their monthly data. Okay, so zero point 0.3 is the expected number there for the month on month. Now, if you guys have been paying attention over the last number of months, you would have noticed a lot of talk about the services inflation, right? The like sort of basically wages, like restaurants, anything, like where all the staff is, what's causing a big drive in inflation, and it was the services data. So to me, we're going to keep a close eye on this as well because it could influence the outcome. So really, I'll be looking at this number here and that range, and also the services data. To me, is the two important ingredients. Now, what about all these other numbers? Well, it's one of those things, right? You can't. We will have a cross check of these and just have a look after the numbers and see what's what. Okay, you've got a big range of data. This almost reminds me of the US non-farm payrolls, right? Where everyone thinks it's a really good, easy trading environment, but you've got like 7 different variables. Now we've got a number of different variables here. What I'm highlighting to you is the important ones. Okay, number one, that's CPI, and I would go as far to say the services year on year is the backup number that we need to sort of pay attention to. And so what they're looking for is a big rebound in the services data and stronger result from the prior numbers. Okay, now so this is the funny picture. If I just come back to the live trade hub, oh, wrong one. Where are we? Here we go. Like just looking at these numbers and trying to work out where the actual outcomes are. Now, as a simple exercise, right, you should be thinking along the lines of, okay, so they give us the forecast. Let me just drop that down a touch so you can see the headings. Okay, you got the forecast, you got the month-on-month forecast, the year-on-year, and I've included the services CPI there as well. Now the range, right? Very important. Now, just for those traders who aren't aware, why do we focus on the range so much? Well, it tells us a lot about what is going to happen. This is what has been factored into the market. Okay. The general consensus amongst, or the average amongst everyone, right, is minus 0.3. The low tier number is minus 0.4 and minus 0.1 for the max. So if the number is below the minimum or above the maximum, it means the market has not factored in that data, right? So that leads to a more aggressive move, right? So if you are placing a trade and you see a bit of volatility, it should relax you because you know that it's going to run a bit further, okay? And that goes for, obviously, I'd say the two more important ones, the CPI year on year and the services data, right? So ideally, and this is where the non-farms come a mess. We're looking for this. That's the expectation. Say we get a higher print on the CPI year on year, right? It's above 2.9. And that's what we're looking for. And that's a really strong buy signal. If we, at the same time, get a number below the services CPI, that can offset that move, right? So this would be up, that's down. If I opened a position on the CPI number itself, and I usually hit the market, no hesitation on that number, okay? Now, we can make this a little bit easier by identifying things that are strong and weak. Like you don't just go and hit anything, right? So we've got a couple of things to be wary of here. There's three releases, but two I would say stand out. We've got to make sure that the outcomes are in line, right? Either both weak than the numbers or both stronger, okay? That's where we're going to get a clean move. Now, why do I say that is because traders in the banks, right? They look at the numbers and go, this is a clear-cut buy or sell opportunity. If one is up, one is down, you'll have some selling, some buying, and then the rest of them going, hey, hang on a second. There's a mismatch in the data here. Let's just get out, right? If there's no clear, defined opportunity, the traders at the banks will wait. They'll close out, and then they'll wait. So now coming down to the inflation outcome scenarios, all we're doing is looking at the bottom end of the range for each of the numbers for a worst case scenario, and the top end for a positive outcome, right? So that's how you sort of got to think of it, and you want to do all this. What I'm going through now, right? Have in your head exactly what you think is where the best opportunity is. And then we try and look for that trade. Okay. So that's like, to me at the moment, I've got sell sterling on weaker numbers. Okay. And because it looks set to go down, the dollar's sort of coming back a bit. But as far as the overall trends go, sterling Aussie's going up, sterling Kiwi's going up, sterling CAD, sterling Swiss, and Euro sterling's going down. So if we got like stronger numbers, right? You'd be looking to buy those pairs, right? And it would be a mistake, and this is what most people would do. This thing, as we saw on the data, sterling against the dollar, is basically long-term, short-term momentum is down, right? So if you see the numbers and you come in without thinking about it and you go and buy sterling, yeah, that's still probably going to go up, right? But it's going to have trouble because the trend is down. Whereas these ones here will go up very easily because that's the current trend. All right. So we've got a few things here. Now, would I load up on all of them? In the past, I have done. And, I've had some great outcomes and I've had some pretty average ones where you get one or two going really well. One doesn't get triggered and the other one you get stopped out. So it's what you'll find, and I've got a lot of experience trading multiple pairs at once on some of the numbers. CPI is a little bit easier, um, but it can create anxiety and frustration, right? Because you can't really keep abreast of what's going on in the pair. So to me, I would be selecting one pair that you're very comfortable with. Okay. Now, in this scenario, do I cover both bases and look to sell sterling and maybe buy, sterling Kiwi or sterling Aussie? I mean, RBA and RBNZ have just cut rates. Both of them have gone a little bit cold on the, like that's it. We've cut rates and we'll have to wait and see. We're not really investing in more rate cuts just at the moment. That sort of cautious thing, which diffuses the downside somewhat. Sterling CAD, sterling Swiss, right? Very good, as well as sterling, euro sterling. All right. So that's where we are, right? So the main thing about looking at the markets, okay, if I'm looking at momentum, right? And you know what? Over the last 4 or 5 hours, the stochastics is really diffused. What I'm sort of looking for on sterling, okay, if I show you the daily chart, okay, it's like really peaking, right? It's a bit of a squeeze here. To me, it's at a great level to be getting short. Data comes out strong. Well, it will go up, but I think there's better opportunities on some of these other instruments where it's got some fresh legs. Now, the Aussie and the Kiwis, right, have come out sort of diffused, as I said, the bearish momentum that comes from cutting rates. They were factored in, but both of them in their statement have come out and said, you know what, that's it for the moment. We're going to wait and see. We might be on hold for a longer period of time. So, so from the time I've done my analysis, and this is what you've got to check when you come back to the screens, right? You've got to check, okay, has anything changed? And things have changed over the last sort of 3 or 4 hours, right? So they're diffused somewhat. Sterling yen is right on the cusp of doing something, but it's lacking direction overall. Euro sterling, okay, I like the fact that it's almost at an overbought situation, coming back towards resistance. And if I come back to, if I was to draw a trend line there, it would give me greater confidence that that would be a good instrument to be selling if the UK data is strong, right? Okay, so what I'll do is what I do is I do my analysis on the analysis platform and I execute on the trading platform, right? So you want to have some sort of clear setups here. Like Sterling CAD, I'm saying like Sterling CAD is a buy here, right? And if I look at the daily charts, it's well, it's still going up a bit. But I tell you what, with a good trend line, right, and for a short-term trading opportunity, more so than holding on to the position for some time, I like the idea. 178.77. This is like 20 points below, right? And you know what? With stochastics, it has the ability to go down. I do like Sterling CAD a little bit better. More so, even though I've got it sort of trending up, it's so close to the pivot point. It could be an easy trade to the downside and or top side for that matter, right? The buy sterling, sell sterling, right? That's actually one of those pairs that you could actually be really focusing on either side of the market. Would I go on with pending orders? Maybe, right? Because if I'm trading more than one instrument, I need to keep abreast of what's going on. Sterling Swiss, okay. Now, I think I had this, yeah, it's going up, but the stochastics is going down. So momentum is down sort of short term. It's going up long term, and it's almost oversold. So it's the setup here. This is a bit of a lesson. If you have already done your analysis, make sure you come in and give yourself a bit of time to double check because things have shifted a little bit over the last 3 or 4 hours. Okay, so Now, what am I sort of thinking? So if I come back to looking at the analysis and I'm like, I'm looking to buy all these things and sell euro sterling and sell sterling. I just want to confirm the opportunity in front of me, right? So sterling is right there on the cusp on the hourlies, right at the pivot point. Once again, this is like sterling. What was I looking at there? Sterling CAD. It's just now into a position where it's like potentially could go either way, right? The is what I'm sort of looking for, and coming into the dailies, just trying to get an overall picture here. Okay, it's going up, but it's still below the sort of overall pivot trend pivot, and it is a little bit over. Well, it's getting into that oversold category, right? So the other thing is this is where things can get a little bit mixed up because of what Trump is trying to do. I don't know if he's trying to do his best as far as this Ukraine issue goes, but the fact that that's sort of breaking down, sort of suggesting that's a bit of a dollar, bit more of a stronger dollar. But at the same time, like euro looks like a strong dollar move. Sterling looks like it's set, you know, well, to me, it's either way. I'm now sort of considering either up or down. And the other pairs, well, I'm not really worried about Aussie or anything else. Now, if you guys have got some questions or clues that you want to share, like opportunities, what you're looking to sell, buy, by all means jump in, okay? Because this is supposed to be a bit of a collaborative session. I'm just trying to work out. So the overall momentum here on these pairs at the moment for the course of our day of the Asian session since the New York close is there's a little bit of positive bias in the market. Now, is that going to stop sterling going down on weaker numbers? Absolutely not. But you know what? It does support a bit of a stronger move. Okay. Because if we're getting a weaker dollar as we go into the London setup, then we may sort of get that following through into the North American session, right? So one other thing I wanted to share with you is just have a look at the interest rate probabilities, right? So when you're looking or considering the inflation numbers, consider the what the Bank of England is doing. No change, right? So, and a cut is 23.6%. So where we could get, so no change. If the numbers are strong, it's just going to go up a little bit because of this is already sort of largely factored in that there's not going to be a change, right? 20th of March. But if we get weaker numbers, it's going to lead to a lower sterling because they'll start factoring in a higher probability that they will cut rates. Okay, so that's something to think about how the market is positioned overall. So we can start to sort of piece together the trading opportunity. Now, if I want to look at sorry, if I come in here, get the arrow.
Hey, Brad, I've got a question.
Yeah. Yeah.
Um, since we're looking at the pound right now, it's like literally right at the point. Would you consider a trade on both sides, a pending order?
Yeah, yeah, potentially, Mike, for sure. The this is one of those ones where you can. Now, let me just get the we're just changing it over our liquidity provider too, which is they were going to be they can't do it sort of during the day. So I'm in a bit of a position. So I've got a couple of different accounts here, but my main one is not active. I'll be using demos. I want to show you because you can, but you've got what you've got to avoid, right? Is that like this is a CPI number, and when we know there's a few variables, that's the problem, Mike. Um,
Yeah, the
like
whipsaw.
yeah, it's the whipsaw, right? You've got this month on month, you've got the services, right? So usually with that, I would be placing the orders 15 points either side of the market.
Yeah,
Now, what I would do in this situation though, because we've got a trend line on the bottom, okay, I would prefer to be that was the trade because I know where the liquidity is just below the market. Okay, so you can be looking to trade live yourself. You can actually place a pending order on the top side in case we got some explosive numbers top side. But if the numbers come out weak, there's a bigger ramification. There's a bigger scope for them to factor in rate cuts, right? It's a new sort of, it'll change the trend again. What I'm saying is you would use one, place one order pending, and then trade the other live.
Yeah,
Because then you just need to watch the number because you don't, if you're trying to hit both sides of the market using T-Rex, for example, which I would be doing, it is problematic because you've got to look, there's a couple of milliseconds delay, and by the time you hit, it's already done. The
right.
the other component here is looking at this in like the RPI data doesn't generally impact. This thing here does, right? And then you can also get a bit of residual from the PPI. This is the main number, but you've got to be wary of the others, right? So to me, if it's a weaker number, this is the no-brainer trade, right? Take the risk out and you go, right, what do I think of sterling? Well, if I've done my analysis, long term, it looks like it's topping out. Short term, we're right at a pivot point. I've got a trend line here pretty close to the market. I've got a key sort of bull bear pivot line. If it goes back down through there, I'd feel confident to be getting short. But and this is how you go through and define which ones you're going to be hitting because the like euro sterling has got a nice shape and is looking like bearish, right? I like the idea of getting short euro sterling on bounces. So that requires a strong CPI print. Okay. Sterling requires a strong CPI print. So if I've got two situations here and I'm looking to sell euro sterling, right? It's the opposite to buying sterling against the dollar. So you've got a bit of you've got your hands full. And as I was saying, picking more than one pair is problematic, especially even if you've got like about 5 years experience. It's sort of hard to because you're looking at two things and your heart's going 100 miles an hour and you're wondering what's going on. Pick the easy trade. To me, no brainer. If the numbers come out weak, okay, sterling downside, and I would say sterling CAD, right up your neck of the woods there, Mike. The
Yeah.
sell sterling, buy CAD, and I would say sell sterling.
But you're going to actually wait till the number comes out before you do anything. And then hit it. Like say it takes off 25, 30 pips instantly. Uh, you wait for a retrace. Is that how you
I think because
approach this?
no, because we've got the trend line, I would be looking to I'll place a partial order 15 points below the market. So say you're trading 10 lots, right? So just I would be going in with half the lot size, okay, and placing a sell stop, hip distance, say 12 points from the market, right? So I'm not looking to get greedy. I'd have the trade cross manager on, and I would be placing, if I can just find sterling CAD, because these two are quoted the same way, okay, I can hit both of these, right? So basically you'd place the orders in the market, okay? So this shouldn't
A, a,
execute, even
a
though it's a lot.
pending order. Is that what you're talking about?
Yeah, I'm talking about a pending order on both
Yeah.
the
Yeah.
market. Like we've got 2 minutes here, right? So let me just close all. All right, so let me just get the thing up here, right? The platform so you can see the numbers. Let me just work out how I can work this out. Now, I don't really need to see what the prices are doing. Okay. Now, if I just get Metastock, okay. So what I'm looking for is it's been one of those days, I tell you. Okay, 2.8 and 5.2, right? These numbers here that pop up in this box. Jesus. Okay, we've got 45 seconds. You might think it's close, but we've got time. That box there and this one here, right? They're the two ones I want to look at. Now, weaker numbers, 2.4, 4.9. We want weaker than their outcome. So if I go into the platform here, right? And what I'm doing is placing a sell stop on both of these. Okay, I'm just going to wait till it gets about 5 seconds out or 7 seconds. I don't want to get caught up in the price action. All you're looking for is weaker numbers. Okay. Get the two orders in the market. Now we just watch the numbers, get ready to close if they're strong. Okay,
And they are.
that's a massive number, right? Mental. Well, actually, here we go. Right, this is the clicker. Let me just get the thing off the screen. Okay, services data was weaker. Okay, the RPI a little bit weaker. CPI, that's the nasty one. That is higher, and a better outcome for the month on month. And the core numbers are on par. So let's just check out the price action here because it's probably spiked. I mean, I saw the initial spike when it
Yeah,
came through. Um, okay, so it spiked up into the 30s, right? Everyone see that? See the price
yep,
action?
yep,
And as I
yep,
was saying, the services number has put a spanner in the works. So it's right back to where it is.
yep.
Okay, so this is like a out of everything that we've just spoken about, probably the best part of the learning exercise for this release is looking at the numbers and understanding that this sucker here will offset that, right? It's
Hmm.
zero point 0.2 and zero point 0.2. So the initial spike is the market trades the main number, as I was saying, it spikes up into the 30s, it's straight back to 20 on this one. Now what they
Yeah.
do is they go through and go, okay, now how is everything else looking? Right? So that's up, that's down. Then they
So
start.
did you close out?
I close the pending orders straight away
Yeah, I did too. Yeah,
because as soon as you see a stronger number, the opportunity has changed. But what I
yeah.
would be doing is, you're right, Mike. You're looking at the number here now and thinking, right, what is the opportunity here? Okay, this is a really strong number. Yeah, it might give the long-term chart a chance to go a bit higher until it goes above 127.87. I'm still considering this the top of the range, and on a
Hmm.
long-term perspective, it is looking that way. So the number, this is almost like the CAD CPI and the UK employment numbers. You've got offsetting numbers, which usually happens around when the numbers start to sort of bottom out. That is going
Yeah.
to crush. I would expect the price action probably to go down to like 10 because everyone who's bought at 30 is sitting there now going, oh, this doesn't look good. This doesn't. I better hang on. I've got to hang on. Right?
Yeah.
There's no clear direction here, stochastics wise.
And
So
that little spike there hit pretty much the top of one, two, three, four highs there in the last little while.
well, that's right.
Like right on.
So nothing has hit the Asian day, but I can see what you're saying there, Mike. If I just get
Yeah.
a horizontal line here.
Like I've got a horizontal line there and there's three, four, almost four touches.
So that's something to bear in mind. I would be now going very subjective with the analysis. Let the market decide where this thing is going. Now, as I was saying earlier today, only about 3 or 4 hours ago, I had this going up and the rest of them going down. Now, the numbers, yeah, stronger CPI, but offset by the services. So that is probably neutral to sort of sideways. Overall, I would feel confident to get into a short-term trade, even if it was more on the daily charts than the hourly ones, right? So you know what? The numbers, there's not, put it this way, with the outcome, uh, there is no significant change in the price action. That's up, that's down, neutralizes everything. It's like it didn't even happen. Okay.
So
And
like what do you think of the theory of this we're on the hourly here. It's tried to get above that right about 26, 34, 35. Looks like four times here in the last little while. Hasn't been able to do it. Um, the overall trend is down. Um, it tried to get above it. It can't, or it's not yet. Would you be looking at a short on that, just on that?
if it was here, like not really, because if it was below the market and it was sort of topping out, I would feel a lot more confident. If anything, this is more of a technical trade um, that I would be selling if it broke down here. I wouldn't try and pick the top. Okay.
Oh yeah, no, that's not what I meant. I'm just saying
Right.
by looking at the chart there, it's tried to get above that number four times in the last little bit and it hasn't made it. So would you be more confident than to go short on that based on the overall trend is down?
Sort of. It's not the right level, but yes, I would be confident. Be more. It would be an extra probability enhancer. The fact that has been topping out here at 126.40, right?
Hmm.
I see exactly what you're saying there, Mike, and you're right. It has been topping out, and you know what? If it goes back down, everyone will have sort of lines there drawn and going, "Wow, there must be something around 126.40." The fact is, the data was the crux of it, right? So, and this
Yeah,
is the news. Like people who don't understand what's going on, they're probably buying sterling, thinking, "Well, inflation's gone up." Well, the CPI number did, but not the whole picture. So I would say to me right now, this is too hard, right
yeah,
here, right at the moment. I would like to see a bit more direction and that direction from this number, you just walk away from it, right? You just go, okay, well, that was a bit of a shame. The
yeah,
next opportunity comes from the North American session. Okay. And then you could be looking here, and we know obviously the Donald what time he wakes up. So we'll see what happens with this, if there's any flow through. But then you're looking through the North American session. Is there anything coming out here that's going to really impact things? Not a lot, right? The housing starts, and that's a peripheral number. So what we're going to work with, and this is where the markets are in a little state of flux. I would keep a very close eye on, like, there's nothing here to change the US Treasury yields, right? Think of it as the strength of the dollar. If they go up, the dollar gets stronger. If these go down, the dollar gets weaker. Now,
hmm,
I'd be keeping an eye on the equity markets. There's nothing really coming out to rock the boat there. All we're seeing is at the moment, there's a bit of a risk on profile uh, with equity markets going up and the dollar going down. Now, this CPI number is a big number and it's given us nothing. So you've got to like just walk away. And this is one of the things about preparing for a CPI number or any sort of that number for that matter. Prepare for a neutral outcome. Otherwise, you're going to get really anxious because a lot of the times when the numbers are rocking and rolling, this would be a cracking opportunity. But it's just been diffused with the outcome. And
yeah,
you know what? The look at the over the course. This is since the New York close. I mean, the CAD's were down 18 points. What's that one there? Kiwis down or up 25. Aussies up 13. Like there's nothing going on.
yeah.
Right? So in this situation, get used to just walking away. Okay.
Yeah, this is where a place that I've been burned, not so much lately, but you're thinking, okay, well, it's got to go down. And if you go right back to, I'm looking at about February 14th to today, we're just in a range here about 50 or 60 pips.
Yeah.
So I would get up, I'd hit the top there, and I go, well, the dollar's got to start screaming topside anytime now, and you just get screwed. Trading in this sideways unless there's an event trading in this sideways market
And
because
then look for
it's not going anywhere.
trending markets. This I got to say, I mentioned this the other day. Didn't follow through. Like dollar yen, right? It is going down on the long-term charts. It's actually just had a move against the market, taking out some stops, right? We've now got a resistance line. It just had enough to get above the top of the cloud. It's below the bull bear pivot line. This is actually something that I would be keeping a closer eye on, right? Dollar yen is moving, it's active. The so keep an eye on dollar yen as we go forward from here because it's the sleeping giant that really can absolutely, as a lot of you would have seen, come into play. Now, it's maybe not in the best situation. This is where I would be putting Primetime Pro into play on dollar yen and looking to get into the trend anytime it sort of rallies. Okay. And just for you guys, I will be rolling out. I'm just waiting. There's a license key saving issue that the guy should fix today. I should have it out to you tonight, if not first thing in the morning, and really focusing on this because this is where Primetime Pro would really come into play. like dollar yen is the best trending instrument out of all of them. You may not think so because it usually does nothing. But if you come back and have a look at the mileage it had sort of since March, it's gone up from 47 to 62, 162. That's ready to go the other way, right? And the so anyway, when you do look at the markets, look at the data, read it for what it is, then have a look before you switch off and just start to have a look around technically if there's other opportunities here that might come into play, right? Now this is the daily chart coming into the hourlies. Dollar yen, it's like this is one of those situations. If you're looking to get into the trend on the downside, right, then it goes up here. You're not willing, you're not ready to trade yet, but now it's below the bull bear pivot line. I am. Okay. I'll explain a bit more to you guys with Primetime Pro about the auto trade feature, right? Because it makes sure you get entered in the right level at the right part of the market. And I want to get that rolling. Okay, guys. Well, a bit long-winded. Had I been watching that myself, I would have switched off the screens about 2 minutes after the numbers, after I had a look around. Well, primarily because it's, you know what, I know what the outcome is there. It's dead. So hopefully you learned something there about how these numbers offset each other, because you can see in the market, had this services data been up around 5.3, you've got a cracking trade probably to the top side for about 50 or 60 points at least, right? But as it is, you get a blip up 15 points, back down 15 points, and now it sits there. Traders who don't understand what they're doing will waste several hours watching this, right? As I said, I reckon this goes to 10. It cleans out the people who bought it 30 and above, and then it just sits there. Anyway, let's see how it plays out, guys, and we'll keep moving forward with these, because you'll find out of the live trading sessions, there's things happening. Some of the trades are at the time of the release, okay? Other times they're after the release, okay? In this situation here, it's after the release, and we need to sort of just keep an eye on things as it goes forward. There's no point sitting in front of the screens. Do your analysis. If you see something, put a trade in the market, either using Trendline Trader, Primetime Pro, or whatever it might be, and then you can sort of. We're trying to get solid momentum. At the moment, we don't really have it at the moment, and you can tell because a lot of these instruments are just drifting sideways, right? This is where a little bit of patience comes into play. And if you think trading the RBNZ announcement was fun, think again. That's a bloodbath. All right. So
Okay, Brad, thanks a lot.
yeah, I was going to say being successful is avoiding these bloodbaths. All right. Thanks, Mike. Thanks, everyone. We'll catch you later. I'll get this up on the
Thanks,
screens.
Brad.
Cheers.
See ya.
Ciao. Ciao.